I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast. And this podcast is different than everything else out there. I bring together a new and an experienced investor on each episode, and I let the aspiring investor ask the questions that they need answered. So if you're an aspiring investor yourself, you probably will have the exact same questions. Now, before we get to this episode, make sure you hit the subscribe button below and that little bell to make sure you get notified every time we post a new episode. And now, enjoy the show. Katie, we got Rick on the line. What do you want to ask him?
I have found that capital raising is one of the hardest things when you're doing syndication.
Yes.
And I am just trying to figure out how in the heck do I get people to trust me?
For one thing, you definitely have to know what you're doing, or at least have people on your team that know what you're doing, so that you can communicate and be clear and concise in your communication with your investors. So, because if they're confused, they're not going to invest. So the clearer you can get, the clearer they're going to be, and the more likely they're going to trust you and one day hopefully invest. It takes time. Some people, they just have that Rolodex. There are people out there who are doctors who are raising for other doctors. That's perfect for them. They have their perfect, avatar, as it's called. So you definitely want to make sure you understand who you're talking to, who is your avatar, and what are they going through? What are their pain points? How are you going to help them? You always want to make it about them.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Very excited for today's show. We've got two amazing people on the line with us. We got my friend Rick Martin from Fortress Federation Investments and Katie Lea. So Rick, as is tradition on the podcast, you're up first. So welcome. First of all, this has been way too long in getting you on the show.
It's crazy, Brian. It's been a long time. Episode 252. I'm a little insulted, but as we're talking off camera, so it's my fault. But
yeah, we probably should have had you on right around episode 6, to be honest with you.
I'm thinking one, two, somewhere in there, episode 1 or 2. 252.
Probably.
That's okay.
Well, episode 6 would have been better because 1 and 2, I was still figuring things out, and
that's
so
true.
Those were,
That's true.
I'm not going to call them throwaway episodes because we had some really good guests on episode 1 and 2. But anyway, episode 6 would have been perfect for you. But
next life.
Next podcast I start, you'll be in the top 10. So.
All right, deal, man.
Well, that said, Rick, tell us a little bit about yourself.
Yeah, I'm Rick Martin from Redondo Beach, California. Was not always from Southern California. Was brought up in Seattle, and that's where I fell into real estate. Wasn't an intentional thing. It was more like, I'm going to buy my first house. I'll live in that house, and knew nothing about investment properties really. But a year later, after buying that place, my career sort of took a shift. I'd gone to the UW Business School. It was cool, but it wasn't leading to some creative things I was pursuing. So I traveled up to Vancouver, BC, went to film school, and put that house up for rent. And I was again a broke student, but I was getting some pretty healthy rent checks. And I had no professional property management in that thing. That was like friends, were looking out for it. But kind of learning as I go, but that was how the light bulb went off. And, Seattle was a rising market and it was doing well. And as I left film school, moved down to the Los Angeles area, continued to pursue investments. So I was invested in Vegas a little bit, single family. 2004, looking very good. My uncle, who
right,
who you know where I'm going, who is like, my uncle was like my rich dad. Even though he's my uncle, and my father was my poor dad, who very well educated, great, like incredible, way more smart than I'll ever be. My father, amazing man. But my uncle was definitely the rich dad, real estate guy. And he was like, "Oh, that's brilliant, buying in Vegas. Well, you're gonna do well." And I did for like 2 years. And then that crashed. And I'm telling you, that 2008 crash played into my mindset. Fast forward, we'll get there in a little bit, but around 2016, 17, I was one of those guys who was a little afraid on the sidelines because I was expecting, okay, this is all going to happen again. I can see it. You know, we're in a bubble. You know, that was my mindset. I don't know how you were feeling, but anyway, I continued to invest. Got a duplex in the LA area, partnered on a couple of duplexes in the Palm Desert area, and these were like burrs. You know, we were paying cash at this time, like 2011. Everything was on sale, so we're paying cash and pulling our money back out once we renovated. And it wasn't until like, I don't know, 2017 or something when I heard about Bigger Pockets, and there was this whole network that could have taught me things and answered questions I had for years. And that got me really into out of state investing. I considered Vegas out of state, but
still close. I mean, it's about a 3-hour drive from where you're at.
Yeah. So I went into the Midwest and I was doing burrs and flips and buying bullets in Indianapolis, got me interested in Columbus. And that's kind of where I started hearing this term syndication. And actually, you know, I got on that forum, that Slack forum where I met you, Brian.
Yeah.
And you know, I don't know, something resonated with us. You know, we kept in touch. I think we could see we were committed. I think you and Eric. You know, Eric reached out to me early on, and guys like Stuart. There was a good crew there. And,
I need to reach out to him. I haven't talked to him in a while, but I'll do that later.
I occasionally speak to him through Facebook, which is lame, but and that kind of, you know, at that time I was thinking, okay, you know, my wife and I were considering throwing down a lot of money on a home out here in Southern California. It's going to cost us a mint. And then I just had this whole mind shift where, why don't we buy an apartment? And she was on board, but you know, after several attempts with a JV and doing it on my own, I eventually found my way into syndicating. And really, you know, I had a big opportunity through you and Eric. You know, you guys are cool. You guys gave me a ring. I remember I was visiting in Maui. Remember, I was in Maui, and I was living the good life, and you guys thought I already was a tycoon or something.
Yeah. We called you up when we needed a little help on tackling a large property. Yeah.
Columbia, South Carolina, and about a few days later, COVID was full on, and we all freaked out. Really, I mean, I freaked out. Speaking. If you can remember the way you thought back before COVID hit. Or back before we knew what COVID was going to be, it was the scary unknown. And that was that thing like, here comes this recession. This is like the recession times 10.
I forgot about that Columbia property. Yeah, we had that. We had a LOI signed. We were days away from signing a contract, and then everything shut down. Lending evaporated. And we backed out, you know. Turns out that we probably could have still done that deal, but you're right. It was a fear of the unknown, and you know, we went from having financing lined up to, I don't know if we're going to be able to get a loan for this property, so let's just not sign the contract. And that's where we were on that one. I completely forgot about that deal.
Yeah, I was not comfortable bringing in investors into a deal at that period. There was no way we could take that risk. The first place I always start with the deal is I measure the downside risk. And usually there's some known parameters that you can tweak and kind of figure it out. I can see how we can overcome this risk. Something like COVID, there's just so much unknown. I was shaking. I was like, I didn't want to have to say, sorry guys, I'm bowing out. So I was happy we didn't take on that deal. But, after that, I sort of just took a step back, continued to work on my content. I like to educate investors a lot and create content that way. And, was sort of focusing on just that, as opposed to getting it in deals. And then, about I think 6 months later or something, you guys called up again, and we're back in business. And I'm always appreciative of that, because that really launched me into several other deals. Got me to where.
Yeah, well, it's been a pleasure, and hope it continues to be a pleasure. Keep working with you in the future on future deals too. But a lot of goodness there. I mean, you mentioned you kind of throughout the question, what I was doing around 2008. I bought my first investment property in 2007. And that was
nice time.
Fortunately, I bought it in Salt Lake City and not in San Diego, where I was looking. I was looking in San Diego in 2006, couldn't find anything that I could. I mean, and we were planning on living in it for a year or two, and then renting it out when we moved. But I couldn't find anything in my price range that we could fit into. We had 2 kids at the time, right? So ended up buying a place in Salt Lake City, and the market in Salt Lake City had never really, increased like Southern California and the Floridas. And so it didn't hurt as much, we didn't lose a lot of money. And I still remember those rent checks coming in, and physical checks, is what we got at the time. We had somebody sending us physical checks every month, that I would, deposit at the bank, but true mailbox money is what that was. But 2009, we bought our next property, and had I more sense, I would have figured out how to buy more and more and more. Unfortunately, that was it. But
hindsight's 2020.
I know, right? Yeah, I can't wait till there's a big fire sale on real estate again. But
I don't know when that. I mean, we've been attending these conferences. We've heard the big macro economic news. There's just such a flood of money into the market. There's such a lack of supply. When? I don't know. Yeah. It's overheated. In some cases, I think a lot of people are really discouraged, because it's tough finding deals. If you're in deals, or if you have access to deals, that's great. That's encouraging. Yeah. It's a great hedge against inflation. But if you're not, if you're sitting outside and you're trying to break in, it's tough.
Yeah, it is. It's very competitive, and I try to remind myself of what everybody was saying 3 or 4 years ago, when we were, brand new in that Slack group together. And in 2018, people were talking about how competitive it was. It's never been this competitive. It's never been this competitive. But we were able to find deals in that, most competitive of all time environment. And it's the competition has definitely increased, but I every once in a while, when I pound my head into the wall trying to find that next deal, I try to remember, okay, 3-4 years ago, everybody said it was competitive. We were able to find something. We just need to keep looking and keep on, looking underneath all these rocks, and eventually you're going to find something that works. So still looking for that next one. So anyway, so that said, one question I love to ask everybody, it's about motivation. It's about what gets you going with this. So what is your big burning why?
I definitely want to just be my own boss. I've been lucky in life. I've sort of been a free agent for most of my life, and that's kind of the way I like it, but never really had total control over my schedule. Still had to, get out the door at a certain time, say goodbye to my family earlier than I wanted to, be away from them for hours and hours and hours. Maybe I get a text of a photo or something of my youngest or my oldest, excuse me. And that had to change. So the combination of wanting to be my own boss and wanting to spend quality time with my family is definitely my biggest why. But it's like, gosh, just being able to go to the grocery store when nobody else can get to go to the grocery store. Being able to go for a surf when I want to go for a surf. It's nice having that freedom. I'm finally there right now. Got to keep working on it and continuing to make it and keep it a reality. But it's been a nice life change.
Yeah, one thing that I've put on my radar for next winter is Wednesdays are going to be ski days for me. When the mountain's the least busy, just taking Wednesdays off, going skiing, and every couple of weeks taking my kids with me, just take them out of school, go skiing. I think that's I think our whys are very, very similar, trying to spend more time with the family, with the kids, the people that you love. And not saying I don't love my partners or my job, but that's all it means to an end. So
yeah, and plus, isn't it so much more fun doing your own thing, something that you control and you can have a vision to map out its future. And it's just, it's a lot more inspiring. It makes you get out of bed a lot easier.
Yeah.
I have to ask, wait, and this is a little off topic, but where are you going to go skiing? You're in Idaho now, right?
I'm in Idaho. Targhee is the big resort that's closest. It's probably about a 90-minute drive. Jackson Hole is probably about 2 hours from here on the other side of the mountain range, just different way of getting there. There's a couple of smaller resorts that are closer. But I think I'm going to go a little bit bigger and just hit Targhee up.
Yeah. Sun Valley up there north. You're in a good little area now.
Yeah. Sun Valley is the opposite direction. That's Ketchum area. That's probably about a 2.5 hour drive, so a little further. But yeah, there's a fair amount of really, really good ski resorts. It's not like Salt Lake City where I grew up, where I was, I was 90 minutes away from like a dozen resorts, but
I forgot.
Actually 4, 7, 10, 11. I was 90 minutes away from 11 resorts, but now I've got to drive 2 hours. It's like, oh man.
It's tough, man. You first world problems, buddy.
Right. That's what my daughter always says. First world problems. But so let's talk about some of the deals you've been involved in, and pick your first or your favorite or your most recent, and talk about a little bit about the deal and your involvement in it.
Yeah, I think I would say the most unique deal I've been involved in recently was A-Class in Bradenton, Sarasota area.
Okay.
Bradenton, Sarasota market's on fire, like a lot of markets. There is not a lot of competing product coming online. What there is, it's basically working class. And so it's not really competing directly with A-Class. Really, there's just no competition, but there's an overabundance of people flooding to the area. People want to live in the market. So year over year rent growth is pretty insane. It was 29%.
Wow.
That's not going to sustain, obviously, but it's been a nice little bit of icing on the top last year and a half, and it's supposed to continue through at least the end of this year. But we bought it directly from the developer. So you hear A-Class and you don't think value add, right? But that's pretty much everything we get involved in is value add. So you're kind of poking around, seeing where that value add can happen. And the developer, he's not an operator. He's not looking to push rents. He's just trying to fill the building. He's not thinking about things like, well, this building, by the way, is on the water, on the Manatee River.
Nice.
It's an A-Class, man. This is a good place to be living.
This is where I would live if I were in Sarasota.
It is good living, I'm telling you. And they're developing the river walk right in front of the building. And so we decided to amenitize a bit by putting in a bike rack where where tenants can card swipe, take a bike, and ride into town on the river walk. But yeah, going back to the developer, he wasn't charging for waterfront views. He wasn't charging for storage. He wasn't charging for covered parking or garages. So there was a lot of areas that we could increase the income. And plus, he didn't offer concessions, but he was offering the rent for short-term leases at much lower than market. I think we're about $400 in the end after doing several rental comp surveys. I think there's about a $400 delta there. Yeah. So that was the biggest value add. Plus, we had a tax assessment. It's a pretty long list of ways to add value to the property. So felt very fortunate, and it's going well. We're leasing it up, and leases are exceeding our pro forma by about 20%.
Oh, love that. Love that. Yeah. I mean, my philosophy has changed a little bit. I think development is the ultimate value add, and you guys took it on the back end of that. And as you were talking, I mean, what developers try to do is lease it up as much as they can, as fast as they can. And to do that, they're either doing concessions or low rents, like you say. And so from the A-class perspective, if you want to get an A-class value add, the best time to buy is right after the developer finishes it, and that's exactly what happens with a lot of these. And I think the extra amenities, the card swipe bike rack is good for you. It's good for the people there. You guys are making another income line, and people who are there have another amenity that they're actually going to use. Unlike the movie theaters at most complexes that never get used. But sounds like an amazing deal. And I know a couple of people, 3 that in the last probably 2 years have relocated to that Sarasota area. So, very anecdotally, yeah, people are moving there, at least 3. So
at least 3.
At least three. At least
3's not going to fill our building, but that's
no,
3 more than
yeah,
0,
it's 3 more. Three is more than 0. So, but yeah, good. Sounds like an awesome deal, and I hope it keeps performing.
Yeah, thanks, man.
So last question for you before we bring Katie on. What's next for you?
We're firmly entrenched in the Southeast. That Florida market is very strong for us. We've been in the greater Houston area. Now we're trying to penetrate the Dallas-Fort Worth market, and it's competitive, but we're getting closer. We're just kind of expanding our reach a bit. Of course, we're always loving to look in the Carolinas, but that's been quite competitive. I actually have a smaller JV group that we're looking in the Charlotte area. I got boots on the ground in Charlotte. And that's the thing about real estate, right? It doesn't necessarily have to take one shape. You don't have to be just a syndicator. You can still continue to JV. You can continue to buy an Airbnb. Any form of real estate that works and cash flows, why not? I do think you don't want to spread your focus too much. If you got big responsibilities of managing investor money, obviously you have to carve out more than enough time for that. But real estate's fun, it's like Monopoly, man. And I just so happened to make a couple great connections at a conference recently. They were on the East Coast, I'm on the West Coast, and now we're meeting every Friday and talking about some deals. So
yeah, that's what it's about. And I agree. I mean, you said earlier, what I've tried to do is focus on multifamily up front. And now that I've got multifamily thing going on fairly well, I think it's going on fairly well, but I am also starting to look out into other things as well. We got a couple of properties that we're selling, and it's amazing. We're getting a lot of unsolicited offers on the properties that we have right now, and the numbers are just off the charts crazy. So yeah, I mean, so that's exactly what's going through my head right now is, how many other ways can I be involved in real estate? Should I be an LP? Should I, buy that fourplex down the road for me? What should I do? But I say focus up front and then get really good at one thing and then expand from there. I think that's what I plan on doing anyway. So
yeah, if I may, I'm an LP. I still LP. I'm looking at spreading my reaches and getting as many markets as I can and building up those income streams, because that's been contributing to me, being able to quit my job. It isn't all the active stuff I've been able to do. So a lot of the passive stuff as well. So I have a nice little combination of the two that we're sitting pretty well now. It takes time to get there, but not that much time. You just stick with it, right? I see a lot of people, and maybe you've seen the same thing, Brad. I see a lot of people fade away, and I don't understand why. It can be discouraging, no question. But you just kind of stick with it. There are valleys, no question.
There's definitely a lot of flashes in the pan. And I mean, since we were just at Best Ever and together, there was a guy that I saw there that was also in this Slack group that we were talking about, where we met, 3, almost 4 years ago. And he kind of disappeared for a while, but he just closed on his first property too, and he'll be coming on the podcast soon. But
that's good.
it's one of those where if you stick with it, you're eventually going to get something. If I've seen way too many flashes in the pan, I think you're right. Stick with it, and you're going to hit pay dirt eventually. So. Well, cool. Let's shift gears. And Katie, you've been waiting very patiently, and welcome to the show.
Well, thank you. I appreciate being on.
Yeah. And incidentally, it was another one of the guests on the show that came on actually quite a while ago that introduced us. So very happy to have met you, and it's going to be fun. Let's talk about you a little bit. Tell us a little bit about your history and where you were and what got you into real estate.
I did the normal, every person does it, right?
Mm-hmm.
Kind of goes to college and graduated in hospitality business,
Mm-hmm.
went into sales right away, hated it. Just hated it. It was fun for a while, the parties and the fun, but it got tiring really, really quick. And so I left that industry and came down south and work at, just like a normal job kind of thing, and met my husband. And we, in 2006, speaking of real estate, so in 2006, we were able to have a little bit of money left at the end of the year. And we bought or purchased a single family home. And oddly, where we purchased it, the recession of 2008 didn't hit it.
Nice.
We did not lose a dime from that. And so we just continued to purchase property. And so we got up to about 4. And then I just kind of was like, okay, so now what? Now what do we do? I really love this. I really want to do more of it. And I love my job. Don't get me wrong. I'm still there. I still love it. But I just really love real estate. And I just kind of was like, what do we do? What can make me scale bigger and, better? And so just this year, we just decided to do some syndication, and we're just getting started, just right off the ground, doing underwriting as much as I can, underwriting all over the nation, kind of. Southeast mainly, but I've also done some out in, Arkansas and, that kind of area as well. So that's kind of how it was odd. Like, it was actually my financial advisor who said, you know what, you can give me your money, but I think you should put it in real estate. And what an awesome, financial advisor is that, right? So like, I was really, like, he's a good guy. He's a really good guy. That's how we got started with it.
Nice. And happy you, it sounds like our first investment properties were similar, where, you bought pre-crash with all the excitement and fortunately didn't get burned, but,
but still had the paper checks and just like you did, just like you.
Yeah. And I was so happy when the banks came out with the app where you can do the mobile deposits.
Yes.
Man, that was a game changer.
That was such a game changer.
Oh, wow. I didn't have to go to the bank every month to deposit the check. I could just, snap a picture of it. Yeah. I remember that.
I totally remember that. Yep, so, exactly.
And now when we talk about mailbox money, a lot of people are not quite sure.
What's a mailbox?
What's that?
What's a mailbox?
You mean, yeah, exactly. But well, that's awesome. And one question that I would love to ask, and I'm going to ask it, is what is your big burning why? What motivates you to be successful in real estate?
So that is a very I've been looking and listening to different podcasts and trying to find that exact thing and how to explain it to other people. Right. Mine is very different. So my why is a long story. And it has, so the first part of it is that it deals with health. So my story began when I was 18 and I had 5 brain surgeries and have been dealing with health ever since then. And so I take a ton of pills. I take a lot of different, things going on. And so one of the things that has really been important, especially in this last year, is that, gosh, I need some time to just be, to not have that W-2 job, to have to really push and go for and really, create something for someone else. And so, I've been told no so many times, like, no, you're never going to graduate from college. Well, no, I'm going to graduate. And no, you're never going to have a child. No, I'm going to have a child. And so I'm used to hearing no. And so when someone said, no, you're probably not going to do real well in this world, I was like, well, let me see if I can try. And so that's like the first part of the why. The second part is kind of, I saw my dad and my mom, who were both teachers, and just really close to them, but they worked all their life. And, thankfully, I learned this lesson, right? That my dad, it's not thankfully, I shouldn't say thankfully, but my dad was 57. He was a teacher and he retired. And it was all exciting and he's like, great, everyone's retired now. My mom had retired, everyone retired. And then a year and a half later, he ended up passing away with pancreatic cancer. And so my big why is to push myself to be there for people with cancer, right? So to be able to, in 5 years from now or 10 years from now, or however long it takes, to be able to sit there and say to someone, you know what, you can stay in this place for free when you're dealing with your cancer treatment or your cancer survival or whatever. And I don't know how that's going to look yet because I haven't gotten that far yet. But that's my other why, that's a big, I just saw them save and save and save and never got a chance to use that. And I want to go, enjoy skiing on Wednesdays and doing things like that. So
absolutely.
So those are my whys.
Yeah, I love it. Giving back to the people, and that's a time, in people's lives where, they probably need the most help. It's just like, we got cancer, we got these treatments, those are expensive, they're probably gonna, burn through a lot of their savings. And I think that's a wonderful thing that you're trying to do. So
Can I just add, Brian, that
absolutely.
I think Katie's why absolutely destroyed my why. I mean, how can you compare to that why? I got to come up with a new why.
Yeah, I mean, she's helping cancer victims, and I'm trying to go skiing every Wednesday, by myself, But
I feel pretty shallow.
Man, thanks for making us feel bad about I'm just teasing, of course.
No, it's a great story.
No, I love it. Absolutely do.
And that's like so important and so exciting to be able to say, what a great thing to do and an honor to my dad. So I just love that. So,
well, eventually we'll go skiing together on Wednesdays and, help cancer people together. So
absolutely. I'm
there
all
we
about
go.
that.
There we go. I just upgraded my why. All right. Well, that said, let's shift gears a little bit and come to my favorite part of every episode. Katie, we got Rick on the line. What do you want to ask him?
Well, I've been thinking about that for a while too. So I guess I've got a couple questions. I've discovered the most important part so far that I have understood so far is that you kind of have to have a really good operator and a business plan to be in place for both the GP and the LPs, in order to get those returns back and things like that. What are some of the good systems that you have kind of put into your operations that have like helped with rate of return or with just making sure that you guys get that return back?
I kind of harken back to, I think the first thing you have to do is measure the initial downside risk. If it's achievable, then it's worth pursuing. You definitely want to have a good plan of sub-market research. You want to understand things like median income, what rents are doing in the area. I think if a deal doesn't have, at least for me personally, if a deal doesn't really have a delta in rents, it's not really worth pursuing. So I have a few key components that I look at, analyze, and understand, okay, this deal has legs, this is worth a deeper look. And then, I'm not doing this alone. I got great boots on the ground, basically a team of underwriters. And we all take turns underwriting and see how close we come. And if we're on the same page, again, it's worth a deeper look. And in terms of actual systems, can't take credit for that. I'm not an asset manager. I'm going to leave that to the asset management team. And I think a real important component that doesn't always work out is selecting good property management, good professional third-party property management. You can live and die with them. There's a lot of inefficiencies in between the communication between the third-party property management and the asset management team. So you really have to be in lockstep. And it's like interviewing someone for a job. You can do all the research and the vetting you want until they're out there really proving what they can do and do for you. You're not going to know. But sometimes it's good luck, and sometimes it's just bad luck. But that relationship is key.
Yeah, and I think what Rick said at the beginning is absolutely crucial. Is manage the downside risk. I mean, one of the properties, and Rick's partnered with us on this one. We've had a lot of operational problems, and a lot of it came from one of the bad property managers that Rick's talking about. But when you look at that particular property and the downside risk, we bought a $9 million property at a big discount because the seller had a large prepayment penalty, right? So $7.1 million sales price on a property that appraised at 9.5, right? So we were able to. That was then, that was 2 years ago, and the operations in that property, we found a lot of problems that we didn't know about. I mean, as much as you do on due diligence, you're not taking walls down, but when we started, anyway, long story short, with all the operational issues we've had on that property, our basis is so low that we are still going to make a lot of money on that property, partially because we bought right and partially because the market has gone crazy since then. So managing the downside risk is huge.
I think out of all the properties in my portfolio, probably bought that thing the most, right? I mean, it was like 44 a door, right? It's crazy. Yeah. Now things are trading at 98 a door or something. Just a couple years later. I've
seen stuff trade C class in Augusta trade at 110, 120, so in that property's current condition, we can probably sell it somewhere between 95 and 105 a door today. So manage the downside risk is absolutely crucial.
Yeah. And just make sure you're doing a proper rental comp survey. Like you're really finding out the true rents that you can achieve. You don't want to overstep on that, because you'll find yourself in trouble. You want to make sure that the delta that you're seeing is accurate. And we've all been lucky enough to where the market's been so crazy, it's been so tight, the rental market, it's just insane that we're beating our pro formas. But you just want to make sure that your pro forma is conservative, and those rents are actually achievable.
Yeah.
Yeah.
Absolutely.
Yeah. So I guess that brings me to another question. So basically, I'm in a very small profession. I'm not a doctor. I'm not a lawyer. I don't have a huge, grasp of people to deal with capital raising. And I have found that capital raising is one of the hardest things when you're doing syndication.
Yes.
And I am just trying to figure out how in the heck do I get people to trust me? And then also I have no clue on that part.
It's tough. It's tough stuff. For one thing, you definitely have to know what you're doing, or at least have people on your team that know what you're doing, so that you can communicate and be clear and concise in your communication with your investors. So, because if they're confused, they're not going to invest. So the clearer you can get, the clearer they're going to be, and the more likely they're going to trust you and one day hopefully invest. The other thing is, it takes time, right? I mean, some people, they just have that Rolodex. They got the rich doctor. There are people out there who are doctors who are raising for other doctors. That's perfect for them. They have their perfect, avatar, as it's called. So you definitely want to make sure you understand who you're talking to, who is your avatar, and what are they going through? What are their pain points? How are you going to help them? You always want to make it about them, and that goes for your website too. Like, you don't want to make it about some apartment building. You want to make it about them, like their life story, their journey, how you can help them through real estate. It's not about the building; it's about what the building's going to do for their life. So always focus on that. And then once you get them as an investor, and they are, they've come into your family, that's when the work begins. I kind of like it to when you go through all this process and run up to acquiring a building. It's a lot of work. The people that go through acquisitions, it's just so much stress. Signing on the loan, getting the financing, getting the property, everything that leads up to that point. And then you've done it, and it's like, all right, we did it. But now the real work begins. Now we have to manage the asset. With an investor, yeah, it's a lot of work. We could talk a little bit more about who you're trying to find. But once they put their trust in you, now the real work begins. You have to treat them. You need to give them not customer service, but a customer experience. Like, I'll just pick up the phone. I'll go, "Hey, Harry, how's it going?" I'll be like, "Hey, Rick, what can I do for you?" And, what's up? Is the property burning? I'll literally just be checking in just to say hello and not want anything in return. And I think they appreciate stuff like that.
Yeah. I think what really comes down to is you start with your Rolodex, and that's another thing. We all remember the physical checks. We all remember the Rolodexes too. I don't think my kids ever even heard the term, but you start with your Rolodex. And if you don't have enough people in your Rolodex, you add people to your Rolodex is what it comes down to. And, Rick had a lot of good advice about, finding your avatar, marketing to them, and building the relationship with them. Something else that Rick's done very well is his newsletter. I mean, he's got a very educational aspect on the newsletter, and I assume you're still putting that out. But it's a very sharp looking, when it comes through, nice crisp pictures and a lot of educational content that he's putting out to help other people learn more about it. And that's a big part of it as well, because there's going to be a lot of people in your Rolodex that may not know the ins and outs of syndications. And if you can be the one that teaches it to them, they're going to come to you.
Yeah, absolutely. Yeah, make sure there's not too much fluff in that newsletter. I always, I'll do something where it'll be a little personal, a little anecdote, just to kind of bring them into the story, just something that's going on in my life. But then I offer things of value that actually educate them on what's going on in the market. And then maybe you promote something that you're doing. Maybe you run a podcast like The Diary of an Apartment Investor.
Yeah, the amazing Diary of an Apartment Investor.
Yeah, that's an amazing podcast, that one.
Yeah.
If you're so lucky enough to get on a podcast. But you also when you're stretching out beyond those friends and family, you do have to be considering, how am I going to get my brand out there? I mean, Brian does an amazing job. I'm jealous of Brian. It's incredible, but he's so popular on LinkedIn. Everybody loves him. He's doing a great job, you know.
It's the beard.
No, it's not.
Yeah.
Come on, give yourself more credit. But if you can put out some good content, people will see what you're doing, you know, and it takes time, it takes a bit. It's not going to happen overnight, but people are watching. They may not, you'll get like 1 like, 2 likes, but you'd be surprised. A lot more people are seeing it than that, and they are noticing. So, yeah, you know, that helped me. I put out content. I kind of lean on my old career, and I put out stuff just to kind of show, hey, I'm here. I hope this is helpful, and eventually people will respond to that, and they'll contact you.
Yeah.
All right.
Cool.
Well, we are about out of time. I'd love to keep on talking, but that clock is ticking. But very much appreciate your guys' time today. You know, great conversation. Rick, always good talking with you. Katie, great meeting you. And one last question for each of you. Rick, you get to go first. How can listeners learn more about Rick Martin?
The best way to find out what I'm up to is go to my website at www.fortressfederation.com. And I got a giveaway there. It's basically a quick start guide to investing in syndication. So if you go to fortressfederation.com/guide, there's a freebie there waiting for you.
All right. Sounds good. And Katie, same question for you. How can listeners learn more about you?
Yeah, awesome. So I just got my website together, so it is ready to go. So www.rollingforkcapital.com.
Rolling Fork Capital. All right.
Yeah.
.com. Perfect. And we'll have links to those in the show notes. And I was just typing those into the future show notes as we were speaking. So anybody interested in connecting with Rick or Katie, you know, you got 2 websites in the show notes that you guys can check out. So once again, thanks very much to both of you for coming on the show today, and appreciate your time again.
Thanks,
Thanks
BB.
so much.
Hey, if you like that episode, make sure you hit that subscribe button. But more importantly, if you haven't joined our multifamily educational community, the Tribe of Titans, yet, you are missing out. So get yourself 30 days free by clicking the link below in the description, or go to thetribeoftitans.info, and we'll see you there.